What is up, ladies and gentlemen? Welcome back. Welcome back to yet another episode of Tuesdays with Turbo, which is not on a Tuesday, but it's actually a Wednesday. But my goal is to get you guys and gals a video or a live show every week. And regardless if it's Monday, Tuesday, Wednesday, whenever, I'm going to try to bring it to you. For those of you that don't know, my name is Ryan Turbo Jackson. I am your insurance resource, and I like to break down insurance coverages language because, let's be honest, insurance is its own language. So let me help you. For those of you that have been following along, this is September is Life Insurance Awareness Month, and the first week we kind of started out with insurance or life insurance options for your college age student. And I do apologize if there's any banging in the background. The guys from Bel Air are working on our HVAC, so they are clanging and banging in the basement. So, but that's not going to deter us. We're gonna carry on. We're gonna carry on because this stuff is too important not to put off any farther. So again, just to kind of give you a recap, week one, we talked about life insurance options as far as your college-aged children. Week two, we kind of did the pros and cons of both whole life and term life, and kind of broke down what each one of those were and the pros and the cons to each one of them. And lastly, last week we talked about the older kids first. Now we're talking about the younger kids and as far as children's life policies. Now this week, I don't believe I've talked about any or all of these in great depth, which is why I kind of wanted to wrap this series up with it, because this one might be a little bit more detailed and a little bit more niche, because these are going to be specifically targeted towards folks that own their own business. So if you don't own your own business, I mean, go ahead and keep listening, keep watching, because one day you might. But if not, go ahead and share this, because I guarantee there's someone on your timeline that is a business owner that might be in need of some of these products. So, like I said, we're going to jump into the types of life insurance for small businesses. Now, the first one is kind of a no-brainer. It's group life. I mean, if you have a group of employees, an added bonus, an added benefit that you could offer them as their employer is a group life policy. Quick, easy. Depending on which company you have your liability and business policies through, they might offer life insurance through them. If not, definitely there's something your agent could be able to help you out with this, as well as there's many other life insurance companies that you could deal with. But like we've talked about the last few weeks, auto owners in particular gives a very, very good discount on your current policies if we do add a life product to it. So maybe that's something you would like to, as the business owner, like to make available to your employees. And if you've worked anywhere that did offer this benefit, you're usually pretty aware of what it covers. So I'm not going to dive too much into that one, but that's number one. Number two is key person life insurance. You might be asking yourself, well, what is key person? Well, key person is a policy you put in place for a critical employee or person that's vital to the success of your business. I always like to use the example, if you're a tool and die guy or gal, and your main journeyman, the guy that does all of the manufacturing of jigs and all of that stuff, it would be very, very hard to replace someone like that. This is also the thing here says, for example, does your business rely on an individual who has provided positive benefits to your company's bottom line? Their connections, experience, a number of years with the company, etc. What would happen if they're suddenly gone? This would also, the benefit from this would be, how long would it take to replace said person, if you can replace them at all? How long would it take you to train someone? So these are funds that you could use this policy for to help overcome or any setbacks that could be occurred when this person is no longer with us. So definitely a huge, especially if you have one or two key important players out, and I'm talking outside of the owners or the owners or partnerships that own the business, but actual employees of the company. So could be a very costly process to replace someone like that. And like I said, this is where a policy like this would come into place. Now, as far as how much coverage you should be carrying if you do decide you want one of these, I mean, it's completely up to you. I mean, when you're talking about a key person, there a lot of times you really can't put a number on it. So that's something I would talk with your agent to kind of go over the options, kind of see the cost of it, and then they can advise you from there. The next one is buy sell agreements. I mean, this one's a little bit more common, a little bit more on the day to day, whereas the key person, I mean, it isn't as normal, let's put it that way. But with these buy sell agreements, what it does is, let's say there's two people go into business, okay? Both of them are owners, and they want to protect themselves if one of them were no longer with us. So what that means is, let's say they each have $250,000 that they've put up to start this business, and they're trying to, and let's say 5 years down the road, person A passes away. Well, it would take $250,000 from the remaining partner to purchase that the deceased partner's stake in the company. And a lot of times those funds just aren't readily available. So what this would cover is, if like I said in this example, if each one of you put up $250,000 to get the business started, and person A passes away and I'm person B, and I would like to buy, what you would essentially be doing is buying the company from the heirs of person A. So it's kind of like so it doesn't go, the whole company doesn't go into limbo. It avoids one of the heirs of the person A to come in, and maybe their views of the company are vastly different. And it helps to kind of keep that same level of where you've been. You're not forced to integrate a new person or new persons coming into management. So it kind of gives you a backer there as well. Let's see if they provide it. For example, individual owners in your business buy a life insurance policy on the lives of each of the co-owners. Upon the death of the co-owner, the benefits are paid to the surviving owners. If ensuring the continuity of your business is important to you, talk to your financial life representative. And like I said, these are a whole lot more prevalent as compared to the key person. And then there's just standard life insurance that you as a business owner would get on yourself, because especially if this is a business you would want to continue, or you would want your family to continue after your passing. Just because you're not here, there's still going to be inventory that has to be paid for, labor that has to be paid for if you do have employees. So the business is still going to want to run day to day, unless you just close the doors automatically. But which I'm sure 99.9% of all business owners out there, that's not what they want. They want their business to continue and flourish long after they're no longer with us. So this can help keep the business afloat while the next transition or whatever is taking place. Let's see here. And when it comes to that, when we're talking business expenses, like I said, with the life insurance policy on the business owner, your average expenses are your rent or mortgage if you either rent the building or own the building, inventory, loans that you've taken out, vendor payments, payroll, utilities, and your normal day-to-day expenses. kind of a rule of thumb when it comes to this is 5 times. No, that's completely wrong. Check that. Nope, that is incorrect. I wrote that down by mistake. Let's see here. And what I want to kind of wrap this whole thing up with and put a bow on is, if you are a business owner, having a trusted insurance advisor, agent, however you want to refer to him or her, in your back pocket, on your side, is vital. Because not only are, your liabilities, your your products, your where you're actually located, your premise, all of that's taken. I mean, that's normally what we consider as a normal business policy. But there's other things that come into play, kind of behind the scenes, or I shouldn't really say behind the scenes, but kind of arise when you really don't want them to. And life insurance can help, like I keep saying, make that transition easier. I mean, granted, it's never easy a passing of anyone, but when we're talking about the financials and the day to day, it helps ease that transition into the next chapter of that business. And life insurance is always that. I've said it a million times this month. Life insurance is the only policy you're guaranteed to make a claim on. Think about that. The only policy you're guaranteed to make a claim on. And like I said, the vast majority of business owners want their business to continue and flourish even after their passing. So without having to dip into any assets, anything unforeseen like this is a good safety net. This is a good landing spot, and like I said, it's the responsible thing to do, so you're not placing all of that burden on the folks that are left here. So, and again, getting back to week 2 when we did the pros and cons and differences between whole and term life, one of those products is specifically, if you are getting a policy on yourself, is going to be your best bet. Is going to be your best bet. So as far as I'm not going to rank them as, from important to not as important. Obviously, the most important one is a policy on yourself. Why? Because you can control it, as we talked about in week 1, where if we get the policy through our work, which you are who people are working for. So that's kind of one of the main things I want to drive home with this, is the responsibility to not only the people that are left here after you pass, and where's the business going to go, but in particular, if you do have employees that they rely on you in the paycheck you give them for the work that they do to provide for their families. So again, a business owner is not just someone that writes checks and does orders. I mean, you, especially if you have employees, it's an extra responsibility to take care of your employees. So not only with that, a possible group policy like we talked about, but in the event that you're not here, is everyone in the organization going to be taken care of, and everything move as seamlessly as possible into the next step. So as always, I am open to any and all questions, whether it's pertaining to life insurance, home, auto, you name it. I will, if I don't have the answer, I will find out and I will get back with you. But here's my contact here. You can message me right here. You can comment on this video. If you want to do something a little bit more private, please feel free to message me on Facebook. Give me a call here at the office, or drop me an email. And that is it, ladies and gentlemen. That is it when it comes to our Life Insurance Awareness Month coverage. I do have some really cool stuff coming down the pike moving forward, and I promise you I will try to sprinkle in some of these more of these life insurance shows, just because it is very important. It's one of those things where a lot of times we're we really don't think about it until it's too late. But before I get out of here, I did want to answer one question that I had. And it's a very good question, and I guarantee there's multiple other people that have had this question. So I figured I will answer it right here. And I had someone reach out to me and say and ask, pertaining to last week's video when we were talking about the children's life policy. They said, well, Ryan, I already have coverage through my work life insurance for my kids. I said, that's fine. That's perfect. But going back to video 1, when I talked about having a life insurance policy outside of where you work is the most beneficial because you can control it. Even if you leave that job, this life insurance policy will follow you as long as the premium's paid. So it kind of goes back to the same thing I was talking about. Like I'm definitely not an anti-group life policy guy by any means. If they're going to offer you a very, very inexpensive or sometimes free life insurance benefit from where you work, perfect. Jump all over it. But don't rely on that as your only source of life insurance. Get a policy outside of where you work so that you can control it. It travels with you regardless if you're with this company, you totally switch industries and go to company B, or like we talked about, transitioning into owning your own business. And again, today is the cheapest you'll ever get life insurance because this is the youngest you'll ever be, is today. If you wait till tomorrow, you're going to be 1 day older. If you wait till next year, you're going to be 1 year older. And as we know, the older we get, the more expensive life insurance gets. So let's be advantageous. Let's be proactive. Let's get life policies started today or as close to today as possible. Because like I said, you'll never be younger than today. So folks, I will get you out of here on that. Everyone have a great week, and I will see you next time.